Going back to Friday, we had, as you know, we had trade balance figures coming out, and there was expectation of the monthly trade balance of $67 billion, but it came in below expectations, um, which is means that there was a less deficit than was expected, and therefore that was positive for the U.S. dollar. Uh, and we will have a look at that in a moment. But positive for the U.S. dollar. So we did see after some U.S. dollar selling previous to the report, we saw a quick U.S. dollar rally. And a number that came out though was that the Q1 trade deficit number was 196.2 billion, which is on pace to exceed the 723.6 billion dollar, which is last year's annual record. As well, we had following sometime afterwards, we had U of M consumer sentiment, which fell considerably actually to 79% from April's final reading of 87.4, and so the U.S. dollar once again started selling off as a result of that news, and then jiggled around a little bit before settling for the day. Another thing that happened was that some of the G7 ministers there was a statement put out saying that the G7 ministers called for nations with a big trade surplus to allow the currency to rise, and which is more or less a green light to sell dollars. And in addition to that, the dollar is also has been weakening, kind of on interest rate speculations as well by the bond market. Okay, and what we're going to do is the first thing we're going to do is I apologize. I've got a bit of a raspy voice, and the reason I have a raspy voice is if you look at the chart in front of you, I was screaming. We had this class in LA, and I was screaming to the class, sell, sell at 190 GBP USD, sell at 190. And the reason why I was screaming sell is because if we go back all the way back over here to the December 16th, 2004, the high of 95.48, and we take this swing all the way down, and we start to retrace. We go into this nice pennant here, a breakout, big pennant, which can create a big breakout. We have a parabolic rise, and we have here our 38, 50, 62, and 79% Fibonacci retracement levels. And the 79 Fibonacci retracement level also represents a distinct, these pennant formations here, they often will have a very distinct support and resistance line through somewhere or about at or about the middle, as we can see here, which aligns itself with the 79% retracement, which falls exactly on British pound, the figure 190, natural support and resistance level, and price bounced just below the figure, and it has actually not even touched the figure just yet, and we've had a nice bounce in excess of 200 pips. While we stay here on the British pound, we'll just before we go over to euro and another currency that I want to show you, while we're on the pound, let's just have a look. First test to 190, and then this was the this here was the fall on the trade deficit numbers being better than expected, and then it comes all the way back up after the consumer sentiment report, which was weak. It came all the way back up, tested 190 again. First one paid 120 pips. Second one paid 100 pips. The market drifted all the way back up to test 190 again. Sunday session, twice Sunday, Monday session, and then a fall 200 pips to 180. Now let's have a look a little bit closer. This is our Euro workspace, but I want to go to my workspace list and pull up my British Pound workspace so I can see my British Pound charts, and I'm just going to go to a small time frame here. Here once again is our first rally to 190, parabolic rally. The faster it moves and the more it moves, the weaker it gets, and when it rises parabolically and it's getting weaker, look for a major level, which is the 79, the 190 level here. We have the US dollar rally from the trade figures, and then so the pound falling on US trade figures, pound rallying on US dollar, U of M consumer sentiment figures, and then a fall again. So here some real nice opportunities. Price drifted up, On Sunday, this is Sunday right here, the open on Sunday, price drifts back up towards the 190 highs, and typically during these weak Asian sessions, the market is typically unlikely or less likely to make new highs. 190 holds again, pays you 50 to 60 pips, comes all the way back up, saying, hello, 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 I'm coming back to 190. If you didn't trade me the first three times, trade me now. And then as London picks up, we start to see, actually, London didn't start picking up till down here, but we see a real nice fall. And look what happens on a micro level. We fall, price rallies to test previous support, as resistance, boom, it falls. Falls, right? Comes back up, rallies to test previous support, and what else? Well, I don't know. What else? Let's have a look. Well, a 38% retracement and previous support, now resistance. All right, now that'll be it for the pound. We are going to just check out euro now. And let's look at a euro daily chart. US dollar peak weakness here, 36.60. Euro falls, rallies, bounces at the 38. Here's our 62% retracement. And we actually take first bounce right here at these lows. So it actually just slipped through the 62% retracement. So it's a little bit out of sync with the British pound, which was the 79% retracement, of course. But in any event, in terms of major levels, it slipped through but has since rejected. And formed a real nice, of course, head and shoulders pattern. And has, of course, rallied. Now let's take a closer look at euro. Here's our rally. And then we've since have swung down here. We're at the 62% retracement level here, which should hold at this point. This should hold until we check to see what happens in London session. But the other thing that we want to look at here is, let's just have a quick look. We take our Fibonacci levels. We go from this high to this low right here. We have a bounce, not quite 38%, but that bounce goes to this level of support, now resistance, filling the numbers, and then now it's looking to take another leg down. Right? Oh, I did want to show you something. I'm sorry, I just thought of something here on the pound that I believe is important. We're going to expand this. Okay, folks, I did want to just break away from the euro for just a second, and I think I'm done with the euro, but I want you to have a look at this. We're falling here, and I want you to look at this. You see this rally, retracement, 38, 50, 62. You see the 62% retracement, 8707. Well, look for a bounce at 8700. All right, potential tradable bounce in or about 8700. Right, just the bounce alone, and that's it for that. What I want to do is now is I want to take you somewhere else. I want to take you to a video that we produced last week on the euro yen. I'm sorry, not the euro yen, the pound yen. Where's our friend, the pound yen? And last week, this is here's we have the pound yen, and you see the swing right here from this high to this low. Price rallied, broke through the trend line. Step one of reversal. Came up to the last level of resistance. Step two of reversal. Now we look for the right shoulder to form. And last week, when I showed you price was right here, I said two things. I said, number one, you can trade it either at the 38% retracement right here, wait for volatility to pick up, come down here, touch the 38, and then go. Or you can trade it down here at the 62, but you're risking missing the trade. Let's just watch to see what happened in this case. Boom, there's your entry. Okay. Buy now. Because it's still testing this level of resistance. It's a level of resistance in 38%. Buy in this area. Okay. Oh, I'm scared now if I bought. Uh-oh. Oh, okay. So Um, price is now potentially forming the right shoulder of a reverse head and shoulders. And let's have a look. Say we entered at the 38% retracement, which is 207.28, 207.30, let's say. And let's just have a look. Okay, we're paid. Um, 207.30. Now we're at 208.30, 209. Support and resistance over here. And price has since fallen. So you had 160 pips, a chance to get something out of a 160 pip move, and price has come back now. All right, and I just want to show you how that head and shoulders came to fruition. A pretty decent second leg of 160 pips, and now price is consolidating somewhat. Okay, and I think that that's it for now. Uh, yen daily chart, yen responding accordingly as well. And let's have a look. Support line, yen holding at support. Let me see. I think that's about it. Don't want to get too carried away. And we'll see you guys at some time in the. Sorry, this is Canadian dollar. It's rallied. It rallied and has moved up to 127 event. That's it. I guess we'll call it a day. On that note, we'll catch you later, folks, and nice to chat with you again.